Okay, let's look at USD card, AUD USD, and NZD USD. Let's look at their weekly outlook for the last week of June 2026. And that's starting from Monday 29th to July 3rd, being Friday. So, USD card, what do you see on the chart? What can you see? What do you think the candlestick is saying? Okay. Now we are starting from monthly time frame so that we can have a more solid analysis when we get to the weekly. Now, what do you see? I'm seeing a week of a bullish movement. That's what I'm seeing because so far so good. The monthly time frame has been trending to the upside with a lot of retracement in between and consolidation. But if you look at what's going on here, you see a break from this structure. Okay, now let's get to our line chart so that we can see it clearly. You can see a break of structure, and you can see a break of structure from the monthly time frame. And if you go down to the weekly time frame, you can see the market has broken out from this level. So now, what should I be expecting to trade for this week when the market open? I'll be expecting to buy as long as the market is above this level. I should be looking for a buying opportunity. I think I can draw a trend line here, even though it's not that accurate. Now, the market has broken from this structure, so I'm expecting a buying week for USD card, a bullish week. Okay, I can also do this. I can do this. So now that gives us a sign of reversal. I told us when I was doing the weekly outlook for GBP AUD, GBP card, and GBP NZD that when the market is in your sell zone, if you can see higher low, is a sign that the market want to reverse to the upside. Okay, this is an example of what I was saying. In case if you watch that analysis, if you did not, you can go back and check that pair. But this was what I was saying, that even though this is a sell area, if you see the market giving you higher low, please, that is when you should start looking for buying opportunity. Why other traders are looking for selling opportunity because it's in the sell zone. No, look for the two possibilities because if you can get a trade from this area, it saves you a lot of stress. Just imagine a trader that have entered a trade at this level. Now, this is uh, a lot of PIP. So when other traders are trying to enter the trade at this level, when they are getting stopped out, this trader is already balanced, is in his profit already. What he's looking for is how to look for a way to enter more position in the same pair. Okay, so that is one advantage of trying to look out for higher low, even though when the market is in a sell zone, and trying to look for lower high, even when the market is on a buy zone. Okay, I know this may not be clear now, but just check other of my videos. I think there's a video where I explain this very well. So now, what's our outlook for USD card? Our outlook is this: as long as the price is at this level for next week market opening from on the 29th, as long as the market is at this level, we don't have business with selling. The only business we have is buying. So even if the market give you a long bearish engulfing candle, as long as the market is at this level, stick to your buying bias, stick to your buying outlook that you have done before the market open. Okay. Now, the market can do a deeper retracement. Don't forget, I told us this is already a trend line already formed. So this market can do a deeper retracement to this trend line. Don't start selling because the market has entered into the sell zone. No, It might just be respecting this trend line to go to the upside. You get it? It might just be coming back to this trend line to go to the upside. Okay, so what is our bias? Our bias is simple. As long as the market is above, as long as the market is above 1.40000, we are looking for buying opportunity. When the market goes below it, that does not mean that you should sell. The only best place to sell if the market break through this level. If the market break through this level, if market break through this level, that is only well it is when it is very safer to sell. Of course, for scalpers and intraday traders, you can decide to uh, trade in between this level, but I don't really advise that. If you are a scalper, do a good analysis. If I want to scalp this pair, as long as the market is on top of this level, I'll be looking for buying opportunity I can scalp. Okay. Now, if the market is at this level, I won't scalp it because there's no much movement that can happen around there. So you'll be stopped out. But if the market break through this structure, retest this structure, and give you a sign to the downside, then you can start scalping into the market movement. So even scalpers, let me advise you scalpers and intraday traders, please do a good top-down analysis. Follow the structure from the bigger time frame. Yes, you want to scalp. It is safer when you are scalping in direction of the bigger time frame. Your losses will be reduced. It is safer when you are scalping in direction in the same direction with the bigger time frame. But if you are scalping against it, that is where you have a lot of fake out. So even as a scalper, as an intraday trader, do where to do a top-down analysis, have your weekly bias, know what the bigger time frame is saying and where the bigger time frame is going, and only scalp to that direction. If the market is giving you signal to scalp to the downside, because you know the market is a bullish market from the bigger time frame, you ignore that opportunity and wait for the buying opportunity. I tell you the truth, if you do this, you find out that your win rate will increase. Most of the time, why many scalpers lose or why many intraday traders, why they have a lot of losses is because most of the time they are trading against the bigger time frame. Most of the time, they don't even do their analysis from the bigger time frame. They just draw that their chart from 4 hours and some from 1 hours, so from 30 minutes, and they will just start trading. Now, going against the bigger time frame. You cannot stand in front of a moving train. You know what will happen. But it is better for you to be inside that moving train so that as the train is going forward, you are enjoying the ride. It's the same thing with trading. So don't scalp against the bigger time frame. No. Scalp in line with the bigger time frame. That is the easiest way to scalp. So that is our bias for USD card. We'll be doing the daily analysis every day before the market opens. So that is why you should subscribe to this channel and follow up what is going on here. If you have any question, you can leave it on the comment section, or you can reach out to me via email or any other means. Just you can reach out to me. You can reach out to me easily. So that is that. So in summary, we look for buying opportunity at this level. If the market is at this level, we don't have business with selling. If the market break down to this level, we look for selling opportunity, and that is just the outlook for USD card. Okay, now let's go to AUDUSD. Let's see. What can we get from this market? What's the market saying? Okay, now if you look at the market, you will see this look like a deeper retracement. I can call this a dip. The market has been trending down, and the market broke out from this structure. Now, for many traders, this look like a reversal. The market has broken out from this structure, and the market is about to go to the upside. But there's something you need to see here. The market broke out, retested, and gave you a move, and the market is coming back to that structure. So the possibility that this structure will hold is not is not guaranteed. So that is why at this level, what you should be looking at for, you should be looking at for uh, selling opportunity below this level and buying opportunity above this level. but the market is just pending around this level. So you just have to sit down and watch the market do what it want to do. Okay, so even if you want to buy this, make sure you see some level of higher low before you can buy to the upside. Make sure you see some level of higher low. Now let's go to daily time frame and see if we can see some level of higher low. Now, as you can see, uh there's no clear higher low. These are higher lows, but none is in line with this particular market. So if I draw this like this, it's not correct, because if I draw it like this, it's very, very correct. Now, as you can see, the market broke out from this structure. So it's giving us that what I did was a deeper retracement. I want to continue going to the downside. You can see that from the weekly time frame. You can see that from the weekly time frame, like the market was coming down, 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 then did a deeper retracement. That is what I think the market is doing. Now the market is coming back to its trend. So very possible. So what should we do? Let's go to daily time frame. It's clearer then. What should we do? Now, this structure have been broken, even though we are still sitting in this particular area. So if you want to consider selling this pair, make sure that the market successfully break through this structure, give you a full price action retracement, then you can, and give you a bearish engulfing candle or a weak rejection candle to the downside, then you can start selling this market. Okay, but some persons started selling here. If you started selling here, you have made a lot of profit also. Good. You have made a lot of profit. You know, I told us about entering early. As you can see, the market started forming lower high, lower high, lower high. I explained in the previous analysis that try to watch out for lower high, even when the market is on a trend, on the trend to the upside, and strive to look out for higher lows even when the market is on a trend to the downside. In this way, you can cash early trade. You can cash early trade before the market gets too busy, before people start seeing the market to hunt stop and try to do some move in the market. You have already entered and you are settled. Okay, so that is what I was trying to explain in the previous video. So now, what is our outlook? Our outlook is this: if the market break through this structure, give us a good price action retracement and a bearish engulfing candle or a weak rejection candle to the downside, then we should look out for selling opportunity all through the week. Okay. Then for buying opportunity, if you see some level of lower high at this level now, is still your buy level, but watch out for some level of higher low. Very important. When you start seeing higher lows, then you know that yes, the market wants to continue going to the upside. Now, of course, there's a structure here, but we're not really looking at those now, because we do those in the daily analysis. When we start dropping the daily analysis, I do daily analysis every day before the market open. This is just our weekly outlook to know the where the market is going. Now, if you see a break of this structure, retest, big candlestick to confirm, yes, you can actually take the trade to the upside. So this is our bias for this pair when the market open for the week. Okay, break to the upside, break to the downside. Okay, and remember what I said. Always watch out for higher lows for a buy move, and watch out for lower high for a sell move. Watch out for them very early before the market gets so obvious. Okay, so that is our weekly outlook for USD CAD and AUD USD. So I trust that you subscribe to this channel so that you can get the daily analysis on each of these pair before the market open for the day. Okay, remember this video is just for educational purpose. So do well to make your own research, and once you are doing your trading, try to trade small. Forex is not a get rich quick scheme. It's a business, and it's a long time business. So please take it slowly and gradually. I'll see you at the top. Bye. See you in the next video.